Hey everyone, and thanks for jumping back into the Cryptoverse. This is your Tuesday update premium video. Hopefully you enjoy the content. We're going to briefly touch on liquidations. This is something we've added a little while ago, but I wanted to just briefly talk about it, and then we'll just do a brief overview of the market as we usually do. So you can find liquidations now on the liquidations tab under derivative charts. You'll see total, longs, and shorts broken down by exchanges and the total liquidation count. If you just look at total liquidations, again, it'll show you the short liquidations in red and the green liquidations, and the long liquidations in green. All right. So a lot of times, on these shorter term time frames, especially, we have 24 hours is the longest we have here on the time frame that we're measuring. But if you go to some of these shorter time frames, which we're not really huge on, you can kind of see when longs are getting liquidated, when shorts are getting liquidated, etc. A lot of times Bitcoin will fake people out. It'll go one way just to go liquidate longs, and then it'll go back the other way. In fact, you'll often see that with things like with the Fed meetings. A lot of times, during the Fed meeting, Bitcoin will start to move one way, and then a few minutes later, it then goes the other way. A lot of times you'll see some longs or shorts get liquidated, sort of like a fake out, and then we'll go back the other direction. So now you can pretty easily track some of this stuff on here, long liquidations and short liquidations, and you can actually break it down by exchange if you want. We have it for several different exchanges, and of course you can only look at ones that you want to, or you can show them all. Okay, so these are long liquidations denominated in US dollars and denominated in Bitcoin, and you have all sorts of time frames to look at, and you have all sorts of different cryptocurrencies you can look at as well. And then we also have the same thing for short liquidations, okay, and broken down by exchange. And hopefully this will be useful to people as you continue to navigate the cryptoverse. All right, and it talks a little bit about how to use these things, but a lot of times what you'll see after some type of a liquidation cascade is you'll see then some type of like reversion to the mean. Okay, now if you think back to what Bitcoin was doing back in, say, May, this was a major liquidation cascade where it wasn't necessarily fueled by a lot of spot selling, but arguably a lot of what was going on is, there was some spot selling, but then there were a lot of forced sellers, right? Because they were long, they thought Bitcoin was going to go higher, and they didn't believe in the summer lull, right? So they thought Bitcoin was going to go higher, so perhaps they went long, and then they ended up they were forced to sell. They were liquidated. Okay, so that's what happens. And then if you get a lot of people getting liquidated, it can lead to more people getting liquidated, and then hence you get a liquidation cascade. And then a lot of times what will happen on these types of moves, after you get a pretty big move to the downside on a liquidation cascade, you can then see a pretty nice move back up to the upside. I mean, if you take this measured move from the bottom of the wick here, you pretty quickly had a 37% move in short order, no pun intended, right? But in short order, you saw about a 37% move back up to the upside. So when we talk about capitulation and will capitulation occur, it's this sort of never-ending discussion, like when capitulation, Ben, when capitulation, is it going to capitulate? Is it going to capitulate? Is it not? What you're really looking for, again, is it not to be fueled by spot selling or efficient selling, but a liquidation cascade. Okay, to me, as I said during this phase over here, this is a lot of efficient selling that we saw. This is not a liquidation cascade, in my opinion. No, it's not just my opinion. You just go look at the data. It's not really fueled by a liquidation cascade. You can also go look at the volume on this stuff and see that in fact these moves really were not accompanied by a lot of volume, not compared to some of the stuff we had previously seen, right? I mean, looking at some of this stuff compared to the liquidation cascade that we experienced over here, I mean, it just sort of pales in comparison. And you go back even further and look at March of 2020, again, these moves over here just sort of pale in comparison. So look, I don't think people should be deterministic about anything. And I say that about all sorts of theories. Everyone has a model, right? We got like how many hundred different models on the website now? At the end of the day, you need to remember that no model is going to tell you exactly what is going to happen. And this is why you should not be deterministic about anything. But if anything you're going to be deterministic on, it's that Bitcoin trends higher with time. Okay, and I was actually talking about this today in the Telegram channel. If you actually go look at the fair value of Bitcoin, it's currently at around 37K. when you include all data. It's increasing right now by approximately $44 a day or so. If we actually go get it what it is right now, you can see it's at around 37,088. But yesterday it was 37,044. The day before that it was 37,000. So it is increasing by approximately $44 per day. Now the thing about that is that, we're getting squeezed here. Okay. Like, it's interesting how these models that are of course dubiously crafted, I'm not trying to claim that they're not, but it is interesting, I think, how these models sort of ride that fair value line. And you'll see wicks down to the fair value, you'll see another wick down to the fair value, and then right now we're sort of hovering right above the fair value line. In the same manner, if you go look at, say, the total cryptocurrency market capitalization, we've been riding this fair value line for a long time now. Look at this. I mean, we've just been hovering right above it. And right now, we currently sit about 2% above it, right? About 2% above the fair value logarithmic regression trend line. There's a decent chance we're going to fall below it, but you need to understand that if we do fall below it, that represents opportunity, okay? So, I mean, I've said this before. Bull markets make you money, bear markets make you rich. Of course, you're not going to get rich in the bear market, more than likely. But if you can stick around through the bear market, through the accumulation phase into the next bull market, you should do quite well. It's just a matter of, do you have the patience? Again, a lot of the people that made money in 2021 and 2020 were people that got wrecked in 2018. So I do want you, and I've tried to provide a strategy to sort of minimize how, your downside risk in the first half of this year, which is, what we speculated on at the beginning of the year, is that the first half of this year is likely going to remain bearish, neutral at best. But I do think that the whole bearish tendency is continuing to play out. I think if Bitcoin ends Q2 above 40K, I would count that as a win. I wouldn't get super optimistic and assume that Bitcoin's going to be going for new all-time highs. Okay, I say this to, sort of temper your expectations. It's just, I feel like I would be doing a disservice if I made it seem like any minute now Bitcoin's going to make a run at the all-time high, because I don't think I could in good faith do that when we're also watching, the dollar just simply go parabolic. And remember, we added this chart recently that clearly shows, right? If you can color code the dollar chart by the Bitcoin risk metric, when the dollar's going parabolic, Bitcoin risk tends to go down, and you can see that's been happening. It's been slowly going down. So I wouldn't look at this and assume that Bitcoin's price is about to go parabolic. And the reason this is important, okay, some people are probably like rolling their eyes, like, okay, we know this, but listen, there's some people that are still thinking like, let me just buy every altcoin dip because this is it, right? This is it. Remember, until Bitcoin shows strength or until we get capitulation, you're playing with fire. And listen, I'm not going to sit here and say you can't make money trading altcoins. A lot of people make money trading altcoins, even in a bear market, right? Swing trading ranges. A lot of people do that. That's not the focus of this channel. I've made that clear before. Some people do focus on it, but it's not me. It's not my style so much. But you should know that a lot of people make money trading the ranges, right? I mean, for instance, like, I'll give you an example. If Bitcoin were to go back to 30K in some type of a quick capitulation back down to 30K, or plus or minus a couple K, there's a decent chance that buying some altcoins there on potentially like a bounce by Bitcoin back up to 40K might gain some return on alts. But look, that's swing trading in the short term. That's not really my style. So I'm not going to sit here and say you can't make money on it, because anytime altcoins go up 10-20%, you always have to deal with okay, is this sort of it or not? But for me, as I've said over the last half year, really, show me capitulation or show me strength. I don't really care which one. The point is you need to be apathetic, right? Let's be apathetic about it. Who really cares what happens? Just give me one of them and I'll take it. But until then, I'm gonna still stay away from altcoins. Remember, what we're looking for on the dollar is for this parabolic rally to sort of finish off. And as I've said before, if you actually look at this, dubiously drawn channel here, you can see that it sort of would top out potentially at 112 or so if this is going to go back up to the top of this channel, which coincidentally also corresponds to the dollar risk at 1. Okay, so I would say, again, I'm not a bottom picker, right? I'm not going to sit here and try to tell you exactly where the bottom is, but if the dollar rallies back up to this trend line up here and does something like this, and you also see Bitcoin at a low risk level, and altcoin Bitcoin valuations are just absolutely wrecked, and it seems like they're never going to recover, that might be the opportunity that you're looking for, right? That might be the time to at least speculate a little bit heavier. But I can also say that you probably won't need to do anything other than just stick to the current strategy, because dynamic DCA for Bitcoin would have you putting in more money in the event that we go to lower risk levels. And if the dollar continues to rally like this, I think it would put a lot of downward pressure on Bitcoin. Okay, so I don't really think the strategy would necessarily need to change just because of dynamic DCA calls for it. But again, the current risk on Bitcoin right now is I think around 0.354. Yeah, so it's 0.354. All right, and if you go to the historical risk level chart, you can see we're sort of rolling over here a little bit. It remains to be seen if we're going to continue to emulate this or not. If we do emulate 2013, which again is a big if, it still means going back down to closer to the 0.3 risk level, right? I mean, it still means going back down to the lower 30Ks. So I do want people to not get overly deterministic. I see this a lot where people are like saying, okay, it either has to crash or it has to play out like this or something. Remember, we take what the market gives us. What do we know right now? We know we're risk off. We know that Bitcoin and cash are likely going to continue to make the most sense month over month, and that being patient is probably the name of the game. That's the game I'm playing. I understand if people want to play a different game, but that's the one that I'm currently playing. If you go look at the logarithmic regression curves for Bitcoin, we're still sitting in no man's land, but we actually are getting closer to the upper logarithmic regression, or the upper part of the lower logarithmic regression band, which is currently coming in at around $32,000, which by the way is also the getting into the low 30K region. So maybe in the same way we sort of scratch the top of this one, maybe we'll scratch the bottom of we scratch the bottom of this one, the upper logarithmic regression band. So maybe we'll come down here and flirt with the upper part of the lower regression band. But I will say, I will remind people that we still are sitting at the fair value. Okay, we're still sitting at the fair value, and we're sitting in the most boring risk band. By the way, I've said this before, the risk band in which we spend the most amount of time, right? In the 0.3 to 0.4 risk band, we spend the most amount of time, despite the fact that it only makes up 10% of it. We spend 25% of our time in this risk band, a little bit more than 25% of the time. And this is probably the most grueling risk band there is. Number one, we spend the most time in it, so we're very familiar with it. But number two, the other reason is because, right, when we're in the 0.3 to 0.4 risk band, we're not so optimistic in the sense that like it feels like things are moving right. If Bitcoin's at 0.5 risk, a lot of people are usually happy. You got a kick in your step, especially if it's slightly moving higher. But when you're in the 0.3 to 0.4 risk band, I think a lot of times people are just sort of feeling really apathetic, right? It's like a very, it makes people apathetic because we spend so much time in it. So you get to the point where you really just don't care what happens. You would just like something to happen, right? The reason why I say that is because, a lot of people have a strategy, and that strategy means just kind of sitting tight in Bitcoin and cash, maybe a few altcoins, but not too heavy, until Bitcoin gives us some direction. And as long as we sit in here, the strategy just simply doesn't change, right? So, you either wait for Bitcoin to show strength or you wait for capitulation. Either one doesn't really matter. But that's why I would say the 0.3 to 0.4 risk band is the most grueling risk band by far. We spend the most amount of time in it. And you have half the people calling for a capitulation and you have half the people calling for another rally. And we just kind of have to be patient. The 1 year return on investment, by the way, for Bitcoin is now at 0.661. But I do imagine this is actually going to go back up to 1 here in just a couple of weeks, because we know that in May of 2021, Bitcoin had a crash down to approximately $29,000 in just a couple more weeks or so. And so assuming Bitcoin stays above 30K, then we should see the 1 year ROI go back up to approximately 1. All right. And then we'll continue to see what happens during the summer. If you want my opinion on kind of where we are right now and what I sort of see happening for at least the next couple of months, these things are hard to predict, right? So, I mean, don't hold me to this. I'll certainly flip it if things look different. But, my best guess is that Bitcoin is probably going to stay somewhere between 29K to 46K for the rest of the second quarter. Okay, that's my guess. I can't be sure. I don't really know these. I can't really say for certainty what exactly is going to happen, but I would say there's a pretty good chance that Bitcoin will stay between, say, 29K plus or minus a couple K, right? Plus or minus. I mean, I don't. I mean, if we go down the bottom of the corridor, so be it. But somewhere between 29K to 46K, 46K because that's the yearly open, and a lot of times the yearly open does offer some level of resistance, as we've seen at around $46,000. We have seen some resistance at around that level. So I would say in Q2 we're likely going to remain bearish, neutral at best. Wouldn't get too excited here in the short term. We know Bitcoin can make its moves. We could go back up to 42K this week. I mean, I wouldn't be surprised if we did. We just had 5 red weeks in a row. This could be our 6th red week in a row, actually, which I don't think has ever happened before, to be completely honest. So just be patient, carry out your strategy, and we'll eventually get through it. So monthly returns. Well, April was the worst April on record, coming in at around negative 17%. May is currently in the red as well by about 0.06%. So, these are pretty brutal days, right? These are pretty brutal days. And I only hope that the stacking cash strategy and being light altcoin strategy has worked out. Okay. Because all I can really do is try to say what I think is going to happen, the strategy I'm employing to navigate the market, what I see happening over the next, say, 3 to 6 months, and then hoping that strategy works out. I think it's working out so far. I don't think that I'll I certainly won't keep this strategy forever. But as I said on the Telegram channel, I am increasing my cash position from 35% to 40% because I'm still sort of anticipating some headwinds. Look, to be completely honest, I say don't fight the Fed, right? I mean, don't fight the Fed. And I think that's really good advice, right? Don't fight the Fed. And we're at a phase right now where I think we just have to let the Fed do what the Fed's going to do for a while. And they have to fight inflation, and then eventually, they'll roll it back. But until that time, I think that we sort of root for Bitcoin to hold up as well as it possibly can. And then whenever the Fed pivots, hopefully we go back risk on and we just rinse and repeat the same thing. I mean, the last time the dollar went down was in 2020. The time before that, it was 2017. So the next move might not come until next year, and that would probably be the most optimistic scenario. Okay, it would be next year. I still think 2022 is going to be a bit of a grind, especially for the first half of the year. So I would say let's be patient, let's wait, and eventually the dollar will sort of cool off a little bit, and we should at the very least get into an accumulation phase rather than just being in a bear market. Okay, and the reason I say bear market, I'm not trying to like make you feel a certain way. It's just that when you look at the price chart. And let me show you what I see. When you look at the price chart, there's a very different tale being told between, say, this most recent move and what we saw before. What we saw before, we saw a lot of demand. These wicks show you the demand that came in to buy them, right? A lot of demand here to buy these sort of sell-offs. But over here, you see sort of the reverse, right? You see a lot of selling pressure coming in whenever we sort of go up. And even up here, I mean, a lot of selling pressure just took us right back down. So to me, it looks like you had a lot of demand over here and a lot of supply over here. And so because of that, I still think that the overall markets are going to continue to face some headwinds here over the next few months. I did see that I believe I believe was Warren Buffett. I think that was started to allocate into some stocks recently, but I also think he was a little bit ahead in 08 as well. Remember one thing when you're thinking about the economy and when will stocks recover. Stocks should recover before the economy does. Okay, so if you wait until the economy recovers, the stock market is probably already bottomed. But with that said, right? Going into the summer tends to not be the best time for crypto. Okay, it doesn't necessarily mean that we have to have a capitulation, but I still sort of just see us kind of being humdrum between 29K to 46K for the most part for the next couple of months. My best guess. Okay, the Fed needs to do whatever they're going to do for a while. Maybe once we get closer to election time, we'll see them cool it off a little bit, and perhaps markets will have a chance to take a breather from this downtrend. But I'll tell you this, when you're looking at Heikin-Ashi candles and you just see a lot of red followed by a little bit of green followed by a lot of red again, right? This is more indicative of the market being bearish, not bullish. And so I will continue to remind people to be careful when you're thinking about altcoin allocations. Look, people ask me every single week, should they do something with their altcoins? I can't tell you what to do. I'm not going to. One thing you can do is if you haven't been light on altcoins the last couple of months, you can always just treat it as like a lesson. I mean, I've had plenty of lessons that I was taught the hard way, and sometimes experience is the best teacher. So then you'll know better for next time, right? So when we say Bitcoin heavy, altcoin light, and then have cash, it's basically to help navigate times like this. Because the truth is Bitcoin will likely put in new all-time highs. Not every altcoin will, okay? Not every altcoin will put a new all-time high, so I don't want you to get married to any of them, okay? Try not to get married to any altcoins, especially in a bear market. I would say be apathetic towards altcoins. We assume that Bitcoin trends higher with time. Ethereum likely trends higher with time as well. Altcoins come and go. I mean, I like some altcoins. You guys know I do, but you should not marry them. There's a lot of risks associated with all of them. A lot of them are in situations where VCs own a majority of the supply or a lot of the supply. They're more centralized than you think, decentralized in name only. And then you start to realize that, the only reason this whole show exists is because of Bitcoin, right? Like if Bitcoin didn't exist, I don't really think this show would exist. So having Bitcoin is a great way to sort of measure your portfolio, to measure everything else against. Okay, so like if you have Bitcoin and then you sort of branch out to altcoins, you always want to constantly measure how are they performing against Bitcoin, because if they underperform it, you don't need them, right? You just don't need them. You just better to be in Bitcoin. Okay, the dominance is still sitting at around 42%. This is something I still think is likely going to go higher. So I'm looking for the dominance to continue marching higher here over the next several weeks. That's my expectation for the Bitcoin dominance. So that's what I'm going to continue to look for. Again, it doesn't really matter if Bitcoin's price goes up or down. I still think the dominance is going to go up. Therefore, I remain heavy Bitcoin. I think my current allocation, my Bitcoin and Ethereum percentages are now at 93% total. So if you add my Bitcoin and ETH, I'm at 93%. Obviously, most of that is Bitcoin. That means I'm at 7% alts. And then stable coins represent around 35% of my portfolio, but I'm going to push that to 40%. Okay, my goal is to push that to 40%, and then just continue to be patient. All right. I still am DCAing Bitcoin, but that's the only cryptocurrency I'm DCAing right now. I don't care about the risk with the other coins. I don't really care if they go up or not. It's just not my time for alts. Okay, it's just simply not my time. This is not the types of market conditions I like to DCA altcoins. If this proves to be the bottom and altcoins have already put in their bottoms, then so be it. But I'll tell you this, you still have Bitcoin sitting at 38K, but a lot of altcoins continue to put in lower lows. I mean, you have ADA at 78 cents, Polkadot at less than $15, Avalanche at $60, Litecoin's at 100, XRP's at 61 cents, Matic is pushing $1 now. So you see what I'm talking about, right? I mean, Bitcoin's basically at the same price it's been at week after week after week for months now, for the most part. But altcoins are putting in lower prices, or they're already at the bottom of the range that they were at before. So if Bitcoin goes back to the price that it was at before, you have to imagine that altcoins are going to be putting even in lower lows. So be careful with altcoins, right? Be careful with them. They are risky. I don't want people to just throw money into a black hole. I want you to be careful. I want you to remember that Bitcoin trends higher with time, and that altcoins, they come and go. Some of them will stick around for the long haul, but I would not marry any of them. Do not get married to them. It's easy to get married to them. It's easy to fall for the, this is the best community ever stuff, but don't get married to any of them. They can come and go. Just go look at the top 10 from 5 years ago. You probably won't recognize half of them if you join crypto in 2021. Okay? So you can keep that in mind while we continue to navigate the cryptoverse. And then finally, I do like to touch on the actually one thing I want to say before I get to the social stuff. We are developing, hopefully by the end of this week, in a few days, we're going to start to put out the indicator dashboard. I think you guys are going to really like it. It's ultimately going to replace the homepage. When we launch it, it won't be on the homepage, but it's ultimately going to replace the homepage. We're going to have, an aggregation of risk metrics for a lot of different indicators that we're going to aggregate them, weight them, put them into an on-chain risk level, a social statistics risk level, and a price metrics risk level, then combine all those three into one risk level for Bitcoin, or not just for Bitcoin, but actually for the entire asset classes, maybe just Bitcoin. I guess we'll see how we finalize it, but we're gonna be looking at it a couple different ways, and I think you guys will like it. And it sort of will bring us to ultimately what you guys want, right, which is alerts on things that are happening. So, like let's suppose there's something interesting going on with, like I don't know, like transaction fees or the HODLways or something. You don't want to have to log in every single day and go track that stuff down and go, okay, well, let me go look at the HODLways and see what they're doing. And wait for the chart to load, and then we'll see, where everything is. No, right? You don't want that. You want a risk level on it. You want it to something to say, hey, this is doing something. Pay attention. Now's the time to pay attention. You don't want to check in on it every single day. So the goal is to ultimately develop that. But in order to develop that, we first need to come up with the risk levels for them. We're going to push out approximately 5 of those for each, under each, to maybe like 5 or 6 risk ones on the price, 5 or 6 risk levels on the on-chain stuff, and then maybe 5 or 6 on the social statistics. Combine those all together into one indicator dashboard to help navigate the cryptoverse. That is the goal. Okay. So to just finalize this stuff for today, let's just quickly look at some of the social statistics. One of the interesting things I think is that the layer 1 stuff, I was looking at this a little bit. I think that you guys were saying it was just because of some of the stuff going on in the cryptoverse with the NFTs and also Vitalik and whatnot. But if you go look at Twitter followers for layer 1s, they actually shot up a lot recently. Okay, they shot up a lot. And one of the reasons, if you actually go look at Ethereum, I mean, it's spiked a lot. I don't really like that because normally when it spikes, it means bad things are coming. If history is any indication, but that's just something that I thought was interesting. But furthermore, if you just look at, say, Twitter followers for analysts, you can see it's sort of leveled off here a little bit, which is an okay sign, right? Like it's better than a downtrend. Reddit comments are still in a downtrend though. Okay. Now I'm still looking for these things to sort of level off. I have to assume that if things just stay in a fairly systematic downtrend, and you could argue that maybe it's leveling off a little bit, but I'd like to see a little bit more confirmation of that. You'd really like to see these things level off and ultimately become background noise. It's when people get apathetic that's when you get the big moves to come, right? Whether it's a capitulation or whether it's a massive move to the upside. Normally, once people get apathetic is when you see those moves. So that's what I'm looking for. We haven't seen that yet. And as far as YouTube, things are just continuing to go down, right? Views are going down. People are becoming uninterested. And this is why I keep saying, I'm not really anticipating anything crazy for Q2. People are going to be going outside, enjoying the summer and whatnot. So, and as I said before, I think Q2 is going to be bearish, neutral at best. So if we close Q2 above 40K, I would count that as a win. Until then, I would say just, stick with your strategy. If you're DCAing Bitcoin like I am, I just keep DCAing it, but make sure you have cash on hand in case this thing goes south. Because, there certainly are plenty of indicators that would suggest it could, okay? I know there's some on-chain stuff that is a bit more bullish. Like if you look at, say, like the illiquid supply, it looks very different from than it did in 2018. That's why I don't want people to be too deterministic about anything here. But there's also a lot of on-chain indicators that remain bearish. So, really the truth is you can make a case for the bulls and the bears, right? But if, purely price technicals, not from, say, like our traditional TA point of view, but just as far as I can see, the market still remains relatively bearish. And we haven't really changed that trend quite yet. Okay. Also look at equities, right? Equities have just been getting hammered recently. So I think we'll see things turn around a little bit later this year. But in the short term, we still have a lot of work to do, I think, to get past this phase. So stick to your strategy. Thank you guys for tuning in. Leave a comment down below if you have any questions, and I'll see you next time. Bye.